Hello and welcome, stock market traders and investors. Q4 earnings have begun to be released for certain companies. Many are missing targets, including construction equipment giant Caterpillar with the ticker symbol CAT, which missed its earnings per share target by over 14%. But a huge discrepancy between previously predicted and more accurate recent guidance was provided by Nvidia, ticker symbol NVDA, which you can see here. Now, if you're an Nvidia shareholder, you've already taken some pretty heavy decreases in the stock value, as it shows a 52-week high of 292.76, whereas it now sits at, as of the creation of this video, at 131.51. This is a huge decrease of 55.08%. So what went so wrong for Nvidia? So Q4 earnings predictions were previously set at 2.7 billion, and the company was trading at a stock value of 160.15 at market close on Friday the 25th of January, which represents a still significant downturn from their high last year. And we'll look at the possible reasons for this later in the video, but they lowered their Q4 earnings projection, as I said earlier, prior to they were predicted 2.7 billion within 2%. However, they came out on over the weekend and lowered their predictions to $2.2 billion. As seen here, so it says fourth quarter revenue is expected to be 2.2 versus previous guidance of 2.7, and gaming and data center revenue has fallen below the company's expectations. So this is huge for a company as large as Nvidia, with a huge market cap the same as Nvidia's. A $500 million discrepancy is not something that can be ignored, and represents a huge miss of almost 20% of revenue compared to earnings. Of course, you can imagine this sent the stock tumbling to 136.58 as of Monday throughout the weekend before markets even opened. This is not entirely unexpected from Nvidia, however, nor in my opinion does not spell the entire company's decline in the future. So there are a number of reasons why Nvidia possibly has declined, and the first of which is Nvidia stating themselves is the slowing of the Chinese demand. So it has contributed to their decreased earnings expectation, and this does have a little bit of truth to it. China is still growing at a rapid rate compared to many other countries such as the US, which has a growth rate of around 2.5% to 3%. So as you can see here on this graph provided by the National Bureau of Statistics for China, it's still growing at a rate of 6.4%, which is still huge, but as you can see, the last 4 quarters have been declining from 6.8 to 6.7 to 6.5 to 6.4%. So this has been slowing. This, coupled with what Trump has called up to $150 billion in tariffs on China, may well have had an effect on Nvidia's bottom line. And I think this is something that is going to come up consistently with companies releasing earnings. When they fall short of the mark, they will use China as an explanation. And if a company is active in China, I think you're very likely to see falling earnings from that particular portion of the market, and whether they can make that up with other portions of the market is yet to be seen, as companies haven't released their full earnings yet. But I do think this is a trend that's going to continue throughout Q4 earnings reports. And Nvidia's next big problem, which started off as a dream really for Nvidia, is cryptocurrencies. And as you can see here, a majority of cryptocurrencies have had a huge crash from their high. So Bitcoin was trading at almost $20,000 back at the start of 2018, and people were pumping money into purchasing graphics cards, and it's all the way down to $3,400 as of this video. And during the peak of the crypto boom, Nvidia was selling GPUs faster than they could produce them, so of course what's logical to do in this situation is to ramp up production massively, which, when the cryptocurrencies fell, left Nvidia with huge stockpiles of unsold GPUs. They have been reducing prices in an attempt to shift these overstocked GPUs, however this has also cut into earnings, as they previously priced in earnings as they were selling these, as they had the assumption that they were selling these products at full price. And also, since the crash of the cryptocurrencies, the used GPU market has also been flooded with people attempting to get rid of mining cards, and this has also again taken another chunk out of Nvidia's bottom line as people look to grab a good deal and buy used GPUs. Nvidia's next issue, which could potentially have caused their stock decline, is their new architecture, Nvidia Turing. So Turing is named after Alan Turing, the famous mathematician, and it is the code name for Nvidia's latest and greatest GPU architecture and was intended to bring groundbreaking features to the masses, such as real-time ray tracing and programmable shading. So Turing sounded fantastic, and many PC enthusiasts were extremely excited for the launch of Nvidia's new GPU, which in the absence of the competition from AMD recently has typically been the market's top performer, so it's the sort of must-have graphics card. However, the release price of Turing, which is here, has been $749 for their RTX 2080, which is a huge, well, it's not huge, but it's quite a substantial increase over £620, which is what the previous graphics card, the GTX 1080, was released at £620. So even with inflation counted in, it's still a fairly sizable increase for a next generation product. And this seems to have been putting off a lot of people. And another reason for poor Turing sales is down to its new feature, ray tracing, which many people agree is not quite ready for fully consumer use at prime time, even though it does show some amazing promise. So I do believe that it doesn't show complete promises. Even Nvidia's top GPU, the 2080 Ti, which is over £1,000, £1,100, it does struggle to ensure smooth gameplay with the enabled maximum. And this leads me to believe that many people will be waiting for the next generation product to purchase a ray tracing enabled GPU when the technology has matured. Nvidia has also struggled to get it implemented into new AAA games, meaning that those who do upgrade may not even be able to use it in the games that they play. And this has been another reason, is consumers just don't see the benefit of ray tracing currently, as it's not matured enough, it's not implemented enough for it to be worth this sort of price, and the entry price is, as you can see on the screen, is quite high. So this all combined has led to the disappointing sales for Nvidia's latest GPU architecture. However, with all this said, I do believe that next generation will be a great success for Nvidia if they can simply improve on what they have developed, not increase prices, keep prices the same as they are now, because I think a price increase on any of these will be a push too far for anybody to buy them. But if they can just iterate on what they already have, get ray tracing implemented into more AAA games, I do think Nvidia have a great chance of coming back and having a great year this year. So to summarise, Nvidia has lost a huge amount of its value since the highs of last year, and with Q4 earnings projections being reduced, by many investors are beginning to worry about Nvidia's stock. However, I do still see a bright future for the tech company if you can hold long term. Around 30% of their revenue comes from server and data center uses, which, although have fallen this quarter according to Nvidia, I do see expanding in the future as more and more moves into the cloud. Nvidia also do produce chips for cars such as Tesla. They used to produce chips for Tesla using Tegra and all those sorts of other things. If you're waiting on time to invest in Nvidia, now does seem like a great time. They seem much less highly valued than they were earlier this year, obviously. They do still have a quite high PE of about 28, which is, there might be a better buying opportunity. However, if you do want to go in now, I don't think you'd be completely stupid to purchase Nvidia stock now. However, there is other companies to consider out there that could be possible better returns and much less volatile stocks right now. So thank you for watching. Like, comment, subscribe, any suggestions you have for any other videos, please comment. Thank you for watching. Bye bye.